So basically, let's go into it a little bit here. So obviously, business credit, what is it? And I think this is the most obvious thing, but not a lot of business owners realize it. It is credit that can be obtained in the business name. Not to be confused, I think when you're talking to a lot of your clients, a lot of them will think that just because it's in the business name means it does report. But that's the big advantage that you have over selling our suite, is that you're going to know who out there does report and where they report to. So obviously this is ability to build up credit under the profile and generate a score for that EIN number. And it also gives the ability to pay out of the business, and it doesn't reflect on the business owner itself. So very, very important as we're in these COVID times, is you're going to have different business owners that may not be able to get the traditional financing, especially depending on the industry. Maybe they've damaged their personal credit trying to keep their business afloat, or maybe they've maxed everything out and they need another avenue to go towards. So that's one of the big things. Why is it so awesome? Is it doubles your borrowing ability. And for instance, I just sold a package a couple of weeks ago to a business owner that thought he was doing the right thing by making a large pay down on his credit card. And he was going to go then for a loan to help keep his business going and help grow it during these COVID times. But as soon as he made that pay down on that credit card under his personal guarantee, they shrank his limit. So one of the very quick examples of how you're then able to then say, okay, that's fine. There's nothing I can do about that, but now help me build up my business credit. That way I have another avenue where I can then apply for different accounts. So that's just one of the main abilities on what you can do with business credit. And it obviously makes you more lendable. You're able to go to the table now with built up credit. And if you have bad credit, that obviously makes you lendable. But then again, if you have good credit, you have dual platforms. So you can show the good credit, you can show the great business credit as well. So as you continue to grow the credit, the business reporting agencies recommend more and more. So this is the big thing as you're talking to these clients, and the potential is, most of them will say, why would I need business credit? I can go out there and apply on my own. And one of the many examples that we hear is, I have great credit, I don't need great business credit. But the obvious answers on being able to separate yourself, there's also some other things that go along with it, is that you'll see as they build up the business credit, their approvals will raise. And as they start up front, it may not be the exact credit limit that they would want, but over time, you'll see this score credit limit recommendation is 1,000. But if they increase their business credit and build that risk factor so it's not as high, you can see that their credit score can jump up and almost double or more than double. And many, many examples on what that can do. So that's the big difference with business credit as you're pitching it and talking with these different business owners, is that you have the ability to go with EIN only options that can be easily increased with credit limits. I think that's probably the biggest thing, is we all know what it's like on personal cards. It's very difficult to get a credit line increase. They're more than likely going to run your credit score anyway to do so, and then we may or may not have them approve an increase. But on the business credit side, you'll find they are quicker, and it's also much easier to get that increase. If they see that a business is paying it back, making the minimal monthly payments, you'll find that that increase happens almost automatically. So obviously nothing to do with personal credit. They can basically initial establishment of credit profile and scores. So that's the big thing. Also, with the score on the business, keep in mind, the business credit score tells these lenders how quick you are at paying your bills. So obviously on a personal side, that means a little bit different, but on the credit score for the business, the one main factor is the higher the score, the quicker you are at paying your bills. If that business owner starts to miss payments, they're going to drop below 50. And that's going to identify that they're then having late payments, charge offs, things like that. So that's the big difference with personal and business credit. So when you dive into the personal credit, we all know the payment history is going to be the primary thing, 35% of the score. What they're using of that account, which is 30%, the length of the credit history, 15%, how much new credit have they acquired, 10%, and then the mix, the different accounts of credit on that profile is 10%. So obviously multiple factors on if that business owner that you're talking to is going to continue to use their personal credit. It's very challenging to run a business using personal credit when they look at all those avenues or how that affects. But the good part about the business credit, as we just talked about, is that if they're only reporting the positive and negative payments, that business owner can then max those cards out. Maybe they can apply to more than one at one time. They don't have that risk of damaging their business credit score. So that's another main factor on what this can do for them and help them drive their business. Another thing too, you'll start to see that different business owners may have gotten laid off work and they have that dream. I don't want to go back to a 9 to 5. I want to start my business. There's no better time than now. I'm out of work. It's hard to find new. So you're going to see an influx of different people starting their business dream. And if they have bad credit, they may not have any revenue. It's a startup. That's where you're able to offer them this credit builder program on being able to give them options even as a startup. And they could easily build up the credit within 6 to 9 months on getting that done. So these options have no cash flow requirements, which is an obvious thing. As a startup business, you may not have a whole lot of cash flow. We sign up people all the time that are working towards that. They want to be able to have the credit built up. So when the cash flow starts to come in, they're able to keep moving ahead. They don't have to worry about paying the bills and making enough money and things like that. And it also gives them a competitive advantage. Obviously, if a business owner has multiple accounts under the business name, they're going to be able to do more things than somebody that doesn't. So no collateral requirement. Obviously, the big number one thing, the most obvious, easier to grow the business. So obviously, every successful business out there has the built up business credit, whether they realize it or not. You're actually giving them a platform where they can hand pick what accounts that they want and get it done easily. So let's go over the basics. This is going to be the big thing. I want, as you're talking to these different leads, I want you to be able to sound like an authority figure on how that you know how to build up the credit and what they're going to look for. You know, a lot of this is given in our free information on our videos, and you probably have heard about it. But obviously, the big thing is making sure that that business is set up credibly. So as you're talking with these business owners and you're gearing up to hopefully having them purchase a program from you, these are the things that you're going to want to talk to them about. So that way they understand, okay, here's what I have to do. And then when they get to the point of purchase, it's just really about the building at that point. So the obvious thing is the entity. So either S Corp, C Corp, or even an LLC would qualify. Their business address. I know we all heard about this. Just keep in mind, the ideal thing to use is a brick and mortar or a virtual location. You know, as COVID hit and we're getting further into the future, the home address is becoming something that's a little more acceptable, but not the most ideal. You're going to have your clients possibly get turned down or receive a little bit less of an approval rating by using a home address. So just keep in mind that still the primary use is either a brick and mortar or going with a virtual location. Obviously, the phone number itself, stay away from the cell phone. Either get a landline or a virtual business line that may even ring to their cell phone. Their email address, probably the most important thing, is everybody assumes when they may know about this process, everybody assumes that if they have their business name in the email and then it says at Yahoo, at Hotmail, things like that, that is fine. But the big thing to keep in mind is make sure that when they're picking their email address, they get a professional one done either through a website or even some of the free services will allow you to upgrade. So basically just after the at symbol, it should have their business name in there. And that could be done with the website, which is secondary. That's going to be an enhancement piece, is having a website. Even for a business that may not even need one, they're going to see better approvals and more instant approvals if they have that website. And you'll find a lot of these applications that they're filling out will ask for that very reason. And then any business license that they may need or any other documents, depending on the state or county, those will be looked up, especially when they get further in the credit building cycle. And also the big thing is taking all of those items, making sure that they add up, they match everywhere. You know, they shouldn't have different information listed on the articles that they're using on the application. So really just making sure that they have all those pieces complete and that they make sense and they're all current. Then they're obviously going to need an EIN number. That's probably the most obvious thing. That's how they're going to apply to these different accounts. Make sure that they have that and that's what they're using. Don't use the social. The one big piece too is the business bank account in the business name, no funneling into the personal account. So it has to be an actual account in the business name. We found that it's a little bit easier to get, an account with a credit union. Obviously, some of these big banks want to see a certain deposit or a certain amount month to month. Credit unions are a little bit easier to get approvals or accounts up front. So that's one thing to look into if they have questions with that. And then obviously getting set up with the different credit bureaus. So obviously the most obvious one is Duns and Bradstreet. They're the ones that you have to call or go online, apply for that free Duns number. Then after you receive it or after that business owner receives it, they can then start to build up that profile. Then they're going to want to verify that on Equifax and Experian that their information matches. Make sure there's nothing different on there than what is actually current with their business. And then after that's complete, this is going to be, the more of the easier pieces going into the vendor credit. I know we probably all heard about them, but obviously there's different vendors that'll build up their credit profile. The Quills, the Granger, the Ulines, all of them will report to different things. I know when you log into your portal and you click on that build my business credit off on the left-hand side, you can take a look at all the tier 1 options. And that's kind of the things that I would use with those different leads of yours that you're pitching this program. Keep in mind that there's different vendors that report to just 1 or 2, or some of them even report to all 3. And that's where you'll find the difficulty. A lot of these people will say, oh, I can do this on my own. I watch enough videos online, I can figure it out. But I know by them doing that, they're gonna stumble, they're gonna spend more money than what is necessary with these vendors. And for the prime example, Quill that we all talk about, they're easy to get, but guess what? They're only reporting to 1 of the 3 credit bureaus. So that's one of the talking points is why choose a company that only reports to 1. You need 3 to report before you can move on. So my program, and this is what you can talk to them about,